Anyway, as I said, my guest is Ellen Brown, who is the author of Web of Debt, The Shocking Truth About Our Money System and How We Can Break Free. Now, I have not read this book, and nor was I very familiar with Ellen Brown's work, but I do know, Ellen, that you are a critic, like I am, of the Federal Reserve, but apparently I think we're criticizing it for different reasons. Apart from the legal aspects of it and the constitutional aspects, from a monetary, I criticize the Fed for its roles in blowing asset bubbles, for keeping interest rates too low, for buying too much debt, for distorting the markets, for monetizing government debt, and for being too loose. And correct me if I'm wrong, but I think you're criticizing, you think they're too tight.
Well, it depends on what they use the money for, but I thought QE2 was a good idea because they were actually buying long-term government debt at basically interest-free because they rebate their profits to the government.
Right. Well, they pay a tax. They get to keep a certain amount of profit, and then anything beyond that is paid as tax. But why do you think it's a good thing to debase our currency, to print money, and then monetize government debt? Well, I mean, how does that help Americans when the value of their savings goes down, when the value of their wages goes down, and then the price of food and energy goes up? Why is that good?
Well, I don't think that's the effect that it has. The money supply has shrunk radically. All of our money consists of credit or debt. It all comes from bank credit. The Federal Reserve is a bank. The only difference is Federal Reserve bank credit is basically close to interest-free for the government. So, and just like you were talking about how the banks borrow at 0.2% and then turn around and lend to us at much higher rates, a government entity, a government bank, I mean, I think the Federal Reserve should be nationalized, but my particular push is for state-owned banks, and they could do the same thing Wall Street does. In other words, they could have very low interest for themselves. They don't need to go through this middleman.
Well, how would they have? How would they have low interest rates?
Well, let's say like California. I know the data for California because that's where I'm from. One state has its own bank. That's the Bank of North Dakota, and it's set up as a DBA of its state. So all of the state's assets technically are the assets of the bank, and all of the state's revenues by law are deposited in this bank. Plus, they get municipal revenues and commercial consumer revenues. So they have a huge deposit and capital base. So they can leverage that into loans like any bank does, and they lend it to themselves interest-free. I mean, they can charge whatever interest they want. The point is that they own the bank, and so they get the profits back.
Well, I'm still not seeing what your point is here. So let's assume we abolish the Federal Reserve. You want Congress to assume those functions, or do you want to go back to the banking system that we had prior to the Federal Reserve?
Well, I wouldn't abolish the Federal Reserve. I would nationalize the Federal Reserve.
Okay, so basically what you want to do is you want to take away any pretense of an independent central bank, and you want the central bank to be a tool of the government so Congress can print as much money as it wants to fund any kind of spending that it desires.
Congress does print as much money as it wants to fund whatever it
Well,
desires.
no, right now it doesn't. Right now it's up to the Fed. See, Congress doesn't print. I mean, the Treasury prints money, but it sells the bills to the Federal Reserve. But the decision to expand the money supply right now rests with the Federal Reserve. So the Federal Reserve doesn't have to buy any U.S. Treasuries if it doesn't want to. It can force the Treasury.
That's not going to. The Congress is going to spend what they spend, whether the Federal Reserve buys it or whether somebody else buys it.
No, that's not true, because let's assume the Federal Reserve was not there, right? And Congress tried to borrow money, and the Fed wasn't buying the bonds. Interest rates would rise sharply, and that would prevent the government from borrowing money because they couldn't afford the interest payments. And so without the Fed there to monetize the excess debt, there would be a limit to how much the government could borrow and spend because they would run out of willing borrowers.
Yeah, well, lenders. I would agree. So you would limit the ability of government to do what our government's supposed to do. I'm totally opposed to that. I think
what do you think our government is supposed to do?
Well, I, for one, support Social Security, for example. I think.
Well, where is the constitutional authority for that?
Well, let me tell you my own experience. My parents were in the Depression. My grandmother, for whom I was named, died trying to self-abort her 8th child.
What does that have to do with Social
money.
Security and whether the government has the constitutional authority to run a giant Ponzi scheme?
It's not a giant Ponzi scheme.
Well, sure it is. Well, that's what a Ponzi scheme is. That's what it is. There's two ways that you can fund a retirement system. You can do it. You can set money aside and then invest it and then make payments, and that's a funded system. Or you can simply depend on future generations to make payments, and that's a Ponzi scheme.
No, there's a third way. You can generate the money, because that's an obligation that you have to the people. In other words,
but you're generating it based on the belief that you'll be able to tax future generations to pay off the prior generations. But what if you can't? What if you run out of chain? Right? That's what's happening. But see, here's the point. I agree. You think that if the government could just print money, it could do all the things that it wants. But the reason that the Founding Fathers didn't give them that power is the Founding Fathers didn't want the government to do a lot of things. The Founding Fathers wanted the federal government to have a very small role. And the fact is, when they put us on a gold standard and limited the ability of the government to tax, it was because they didn't want the government to do all these things. That's precisely it. So you want the government to be able to print money so it can do all the things that you think it should do, but not the things that it's legally supposed to do.
Well, it's already decided that it's doing all these things. It has legal contracts to do all these things.
Well, it's doing them, whether it's legal or not. It is certainly doing them. And I agree with you. If we can get rid of the Federal Reserve and hand over the printing presses to Nancy Pelosi or Barack Obama, I'm not really sure, who would be in charge there, Congress or the executive branch. But there's no question that the government would be spending a lot more money, right, if it could print it directly, which means the government would be doing much more damage to the economy. We would have much more inflation and a much poorer and a much lower standard of living.
I don't think so. I mean, they decide how much they're going to spend, and they spend it, and the Federal Reserve picks up the difference.
Right, but if they didn't pick up the difference, they wouldn't be able to spend this much.
Well, all right, but you're saying they shouldn't spend on unemployment insurance.
No. Why should they do that? They're creating unemployment.
Right now we're in a recession or a depression. You need to put people back to work.
Right, but the government's not going to put them to work.
Credit, yes, they are. Well, I mean, that's
How?
what they should do. What they should do is take that money and put it into.
Well, where are they going to get the money?
Well, they would get it from their own government-owned Federal Reserve.
But
I agree, that's
so you
not
just
going
mean
to happen.
so what you think is the government could just.
It's not going to happen.
But
what I say we should do is go to the state level, go to the local level, create our own credit with our own publicly owned banks.
Do you know where credit comes from?
Leverage of deposits and.
No, but where do deposits come from?
Well, it's all bank created. I agree.
But where is it supposed to come from?
Credit. If it were a public system, we're talking about the full faith and credit of the United States. The money of the people is
you're missing
credit. It's all our.
All right, let me tell you where it comes
credit.
from, because you're a little confused. It comes from savings, right? The reason that somebody can borrow money.
With that.
Well, the reason that somebody can borrow money is because somebody else has saved it.